Here we go. Delivery versus payment, from POC to production. Before we dive in, I want to make sure that our panelists here have a chance to introduce themselves, talk a little bit about their view on this, and then we'll get into some questions. Maredith.
Great. Thank you so much for having us. I'm Maredith Hannon, and I lead business development for WisdomTree's digital assets business. We are a large, traditionally ETF and ETP issuer that is now venturing into tokenization. We have 14 products. We've raised almost $700 million to date, and that's through two platforms, a U.S. retail platform and an institutional platform that we'll talk a little bit today about what we're doing and how we're evolving towards DVP. So thanks for having me.
Lidia?
Thanks for having me as well. My name is Lidia Kurt. I'm CEO at Saturn and PX Digital. Those are the two tokenized asset businesses of the Börse Stuttgart Group. We are one of the larger European exchange groups. We are building with Saturn a tokenized asset settlement platform, pan-European wide. We're actually just in the process of receiving the license with an expected go live somewhere the end of 2026. And our Swiss venture, PX Digital, is actually the first DLT exchange receiving a license in Switzerland, received that beginning of the year. And we are running on Saturn, the settlement platform already. So those two businesses are connected, and happy to talk about that today.
Wonderful.
Hi, everyone. I'm Nelli Zaltsman from Kinexys by JP Morgan, where I lead platform settlement solutions. Mouthful. What does that mean? It means we look at how we take the Kinexys blockchain rails of JP Morgan when it comes to payments to facilitate settlement in the digital asset ecosystem.
Thank you all for being here. All right. So, Nelli, we're going to start with you. Let's just set the stage of delivery versus payment in a traditional sense before we start diving into DVP and some of the benefits of what happens on chain. Can you help us just set the stage there for a second?
Sure. So just the basics, delivery versus payment. You're presuming there are two legs of a transaction, something being delivered and something being paid for. I think the great advent of blockchain and what we're used to hearing about is the phrase atomic settlement, which means, one leg can't move without the other. In the context of traditional payments, what has long been, I think, the tension point for settling transactions is in true traditional rails like wires or ACH, that conditionality is very hard to orchestrate against an asset leg without applying a new layer of technology to it. And so we are trying the solution for that. For my job, we are trying solution from the payment standpoint. And my lovely panelists are looking at it from the asset standpoint. So.
Yeah. So, Lidia, maybe a question over to you is, when we're thinking about some of the improvements, some of the benefits that we're getting in some of whether it be the trading solutions or the settlement solutions, talk to us a little bit about what are the benefits we're gathering in DVP on-chain versus off-chain?
Yes, so maybe first adding on Nelly's point, how it's currently being done is basically you have a digital registry. So an intermediary is actually looking, okay, who owns the asset, who owns which cash, and someone, easy spoken, moves the asset and the cash from left to right, but it's simply a registry entry. By moving on chain, we actually make the asset and the cash digitally itself. That allows for DVP on the blockchain and much more automated functions. To give you an example, so currently those processes of actually doing settlement takes up to 2 days, certain asset classes even 5 days. It's a very lengthy process, very cumbersome, very complex. In Europe, we even have 26 different CSDs doing that job, so it's not one cross-jurisdictional infrastructure, and those are monopolistic structures which are very costly. Now, moving on an on-chain DVP infrastructure actually implies that we can do instant or near instant settlement. It implies that we can do that at a reduced cost. So with our infrastructure as an example, we reduce costs by 90% in settlement as well as issuance. So it's a massive efficiency gain when moving DVP on-chain.
Very helpful. Maredith, we've heard a little bit from the settlement side, trading side. Talk to us a little bit, WisdomTree's view, the asset issuer perspective. How is some of the benefits of DVP and what's happening on chain How is that impacting how you think about building products, launching products, going to market, meeting client needs on the issuer side?
Absolutely. And I think there's the cash element of this, which obviously was covered. And then there's the securities and a lot of these transactions that are inevitably wanting to be received. And I think what's unique here is that while cash through stable coins can be atomically settled, can be instantly sent, still the underlying of equities, bonds are still settling on traditional time frames and timelines, meaning banking hours and trading hours. So there still very much is work to be done across these segments, especially when you talk about regulated securities. And we're also talking about the global stage of wanting it to be crypto-like, but yet there's still securities laws, jurisdictional considerations, fund considerations. So it is very much we need to build out different building blocks before we're going to necessarily get to atomic settlement. But what we're doing is building towards that. So I'll give an example. We recently launched an on-receipt function, meaning that our clients can send us stable coins or send us fund tokens and then receive back on chain the opposite of that trade. So it's not atomic today, but it is trying to get to be more and more native on chain and bring those processes, to Lydia's point, and those workflows to be natively on chain to meet those needs. So once the underlying of the securities catch up with the rest of crypto and the infrastructure, we're able to be ready and to process those transactions.
Yes, that's where we're headed. I have a question for you, Lydia. Maredith is just making a point about global scale, right? And obviously with BX Digital and Centurion, you're operating in different environments from a jurisdiction and regulatory perspective, right? When you think about, you mentioned the 26 CSDs, a little bit of the fragmentation that exists in some of the markets that you operate in. Help us understand, how are you thinking about DVP in those contexts? How is that informing or changing anything that you all do when you think about bringing or kind of transacting on chain or providing services to your clients?
Yes, so we are servicing multiple jurisdictions. Those are different regulatory environments. But what is very good about the European markets is that they are very, very far ahead in terms of regulations for tokenized securities. I know about the big boss currently in the US, where we have a lot of regulations coming and being in place. But it's worth looking a bit across the sea and see what's being done in Europe already for a couple of years. And the very interesting part is that actually we have a regulation in place now in Europe which allows us to do settlement without a CSD. So that's something that, in my opinion, having the various conversations here in the US hasn't really reached that point yet. Whether that's something that should also be implemented in the US. Because what does it imply? You can benefit from the full potential of the blockchains if you have an alternative model to settle than through a CSD. You can use public blockchains. You can use automated settlement infrastructure. You can much more efficiently settle transactions if you go away from this monopolistic settlement infrastructures that we currently have in the world. And that's a bit what unifies Europe, although it's different jurisdictions. This idea of actually allowing for an alternative settlement infrastructure unifies the different jurisdictions. So we can do that in every jurisdiction. We can do it in Switzerland. We can do it across Europe. That's, I believe, the biggest innovation benefit that we currently have in Europe and that we are using.
This idea of kind of creating like a unified experience, I think, is important. Nelli, I want to come to you and talk a little bit about when it comes to settlement at Kinexys, and you think about, Kinexys as a private chain versus I was on a panel earlier, and we were talking a little bit about the proliferation of how many new chains are coming out every week, every month, every year. Let's talk a little bit about interoperability. How do you think about, the traditional payments business of JP Morgan and what you all are doing at Kinexys from a digital perspective? How do you think about kind of future path and building towards a future where we're at X number of chains today and we don't see that slowing down? How are you thinking about interoperability in the DVP sense?
Sure. So for those who aren't familiar, the core Kinexys payment product is something we call a blockchain deposit account, and it lives within sort of the four walls of JP Morgan. And then we have a separate product called the JPMD deposit token, and that is issued externally to JP Morgan. And I like to say to people, no matter if we have JPMD or not, which we do, the blockchain deposit account plays an important role in sort of the sustainability of the overall offering as kind of home base to a client where they can come in and out of the banking relationship. And so when we think about the plumbing to make payment rails interoperable, the most important thing I think is that we try to do it with as much um, kind of neutrality to the potential chains that our clients may elect to do asset transactions on. And so one of the great things about some of the solutions we've been working on with Chainlink is that we're not actually trying to issue out assets in order to be interoperable. We are seeking to digest information to trigger smart money movement in tandem with other chains. This allows us to scale much more widely across a variety of chains and kind of follow the volume as to where our clients would like us to ingest those transactions for payment settlement, be much more dynamic for different use cases, and kind of give our clients the most optionality.
It's a great point. Meredith, we're thinking about that same interoperability principle, right? This proliferation of chains. I'm sure WisdomTree is no stranger to trying to keep up with, understand, figure out where does distribution go, where is demand forming. How are you all thinking about interoperability and kind of making, inserting yourself into this, maybe less from a PoC perspective, but maybe more from like production forward-looking basis?
Absolutely. So we're on 7 chains today that we're able to mint onto. And that's a huge focus too of ours, is to think about not only the commercial viability of it, but where is there real demand and where is there real distribution. And I think that ties back to also the DVP and atomic settlement. One is, what are those funding mechanisms? So if you think about a distribution platform that may have clients that have cash that now want to enter into this ecosystem, how are they able to on-ramp that cash? So it might be through a Kinexys platform, it might be through the traditional banking system, and get access to these products in a way that's really innovative. So we're very much thinking about interoperability in terms of commercial viability, in terms of builders, in terms of where's there really demand. And I think what we're really focused on is not necessarily even just the chain itself, but also what's the client segment and how is this really a benefit to the end user? Because I think for all of us, we think that the real goal is when the technology is not to say hidden, but it's not the main focal point of it. It's just a better investment experience. It's a better way to spend. You get your assets instantaneously, or there's some other new feature than what you would have in a Web 2 version of it. That's where you're going to see the real benefit and the real mainstream adoption. So we're continuously looking for those types of opportunities to think about use cases, but also usability and utility of these assets in a new way. And I think that's where atomic settlement from a trading perspective gets really interesting. If you think about, what if you could earn yield constantly on assets? What if you could spend off of assets? What if you could trade on nights or weekends in a way that the liquidity is there? Those what if questions are actually real possibilities with this technology, and depending on the chain and interoperability being heated, the liquidity part of that is a real reality in the short term.
Please.
I'd like to add one point on the interoperability. I think it's very good to talk about interoperability across the different chains, but I think it's very important also to talk about the interoperability to off-chain systems. What we, for example, did is we said trading is going to stay off-chain, because we don't believe by bringing trading on the blockchain that's going to solve certain issues we have. Trading is very efficient. We keep trading as it is, which allows, again, the banks to keep their connectivities to the different trading venues they have. So trading remains off-chain. So we integrate the off-chain trading with an on-chain settlement platform. And also within the settlement platform, we said, okay, the banks are not yet ready for on-chain cash to a certain degree. For example, in Europe, Euro on-chain cash, we have multiple stablecoins. The industry hasn't yet decided on a favorite stablecoin or on-chain cash instrument. Switzerland, you don't have any on-chain cash at all. So we needed to have an on-chain cash. We needed to have a cash which is off-chain. So we are integrating into traditional payment system in Switzerland SIC, in Europe Target 2. So having this interoperability, not just within blockchain system, but also to legacy system and other off-chain system is very important in my opinion, because we cannot have, or we cannot sync everything on the blockchain from day one. We need to see it more on a timeline where things move on the blockchain step by step.
And that's where mainstream. Oh, sorry.
Yeah.
Oh yeah, let's go.
No, I mean, I guess one, I just say, we're not quite at day one. So we've been at this a little while, right? And I think the industry gets into trouble when we start generalizing things like banks aren't ready for on-chain cash and trying to kind of lump that in with the notion of, stablecoin equals on-chain cash always. So again, like what we've been doing for quite a long time now at JP Morgan is using blockchain infrastructure within the same legal and accounting principles that we would use off-chain account infrastructure, right? And that is simply taking the same product, but truly using the technology at its core to enhance the offering. You don't need something to stop being a deposit or a deposit account for it to benefit from new technology. Our blockchain deposit accounts are highly interoperable with the rest of the bank, while also being extremely interoperable with public blockchain through our use of Chainlink and other mechanisms, right? So we have the best of both worlds. Our clients can come in and out of the system, which is one of our strong value propositions. They benefit from programmability of the payments, which is a benefit of uplifting the technology, as well as our ability to ingest events and coordinate them amongst other chains. So I just think we need to be a little careful and clear about that. So, yeah.
Fair point. Meredith, you were going to say?
I was just going to add that I thought that from connecting back to traditional systems, I think it's important when you really want to focus on mainstream adoption, which is, I think, is the end goal, is that it's not just on-chain participants, but it's the masses that are able to use this, that connectivity, and also going back to what are the traditional systems and also the structure of it. And that was what I was saying too about fund structures. It's not like that's left in the dust, right? That there needs to be a connective tissue to it, and to bring that into this new ecosystem and then also send it back, right? I think that's an important point, so that everything is able to work a little bit more cohesively than perhaps today it does.
I want to tie a couple of ideas here just around, Nelli, your comment around like the programmability of payments.
Yeah.
Also with this concept of the synchronization of off-chain data with on-chain transactions. Lidia, coming back to you, you were saying that trading, in your opinion, stays off-chain, right? But you move settlement solutions on-chain, okay? When you're thinking about the data that's required for DVP type transactions in a settlement perspective on-chain, what are the data points that are important from what you've seen in the businesses that you're building? And then maybe to Meredith's point, and this is for the group, what are the points of information if we are doing DVP on chain? What do we need to be sending back off chain to books and records in order for this to really move from PoC to production and for DVP to really thrive?
The data point, we see the data case as an important use case that could move on the blockchain. We see massive problems in today's data distribution areas where banks have to enter the same data multiple times in different systems. So having a single source of truth in terms of data is a great case. So that's also why we are doing work together with Chainlink on that front. It's one of many use cases. For us, it's data could be one that moves on the blockchain. But as many things, I believe that we will have parallel systems for quite some time, but we can get to that in a second. And I also believe with data, we cannot say, okay, from next day, data is going to be on chain, and then that's going to be the only source. I think that needs some time, yeah.
Okay. Nelli or Meredith, any other thoughts to contribute?
I mean, I'm not the trading expert. All I would say is that when I think about transaction initiation, one of the weakest points I think of merging the TradFi and sort of on-chain technology is this notion that the payment needs to be, the overall transaction needs to be initiated somewhere else I actually think that's one of the things that blockchain is really good for. Like, parties can sign the terms of the transaction with distinct keys that authenticate it, and it can set off an extremely composable process, both in terms of moving the asset, pulling in nav data when it's relevant, then triggering the payment. And it's like a beautiful, seamless process. So I just think like thinking more like open-mindedly about where we see this going is where I'm at, kind of.
Completely agree. And to my earlier example of on receipt, actually, that's a blockchain event triggering an action that then we take in an off-chain system. So it's a great example of how an on-chain event can then trigger something that is off-chain through a regulated system, and how those can come together. And over time, may all be on-chain, but at least for the short term, as we're talking about actual equities and bonds that are trading traditionally, it's a great, I think, building block to where we could potentially be over time.
I agree. And I think one of the things that all four of us have agreed on is that we're in this moment where we're moving towards production, right? We should be thinking in a production kind of focused mindset. Maredith, I want to come back to you and kind of think a little bit about client experience in a production environment, on-chain. As we proliferate there, what are some of the improvements that you all are looking at or you want to see, whether it's something that WisdomTree controls, right, in-house and you're able to affect, or if there's maybe delineate that against, here's some of the things the industry needs to do writ large, right, to see this proliferate on-chain in a more, let's say, more scalable way, if you will.
Well, I'm looking at our head of legal. There's a lot in the regulatory space, so he's quite busy for everything that we're talking about here. And even I'll just give a small example of something that's changed. We have a transfer agent, even going from integrated record keeping, from having off-chain books and records and then an on-chain copy to integrated record keeping. It seems like such a simple change, but that actually required a significant amount of work from a regulatory perspective. So it's even minute changes of that, of recognizing from a regulation perspective of what we're doing as being the source of truth on chain. I think that's a good example of this too.
I'll jump in real quick, just the technical side of that versus the regulatory side of that.
Yeah.
You just parse that out quickly,
Sure.
or technically it's like there.
So
And from a regulatory perspective, it's
sure. So, well, we built it where it's integrated record keeping, right? So that our transfer agent has one book and records essentially. So from a regulatory perspective, that view was important, but from a technical perspective, we were there, right? So I do think that is an interesting point. And I'd also say too, to what we can control, a lot of what we're doing is client driven and demand driven. Of clients are saying that they're looking for specific on and off ramps, meaning cash, or specific products, then we can build to that, or some of the features that I've discussed now earlier. But then there's this larger aspect of, and at least, like, again, talking from an asset issuer perspective, what's the underlying and where is that being held? And again, as long as it's going to be custodied in a traditional custodian and not necessarily on chain, I think that's a lot of the work of what you all are doing, of how we can bring that more and more on chain and have it natively on chain. There's still going to be this time delay. That is just the fact of the underlying, and not necessarily that tokenizing these funds magically makes them more liquid. It means that there can be potentially a secondary market, but it doesn't mean that the underlying is going to fundamentally change until those changes are made. So I think there's a few different pieces: regulatory, also from a structural technology perspective of what's accepted and what's put on chain. And then from a demand side too, I do think it's more and more mass adoption. We're still very much playing in terms of the realm of the on-chain economy. And I think more and more as more mainstream types of platforms are starting to integrate with blockchain systems, that we'll see more adoption, which will drive and fuel even more growth.
Lidia, how do you feel about BX Digital and the place that you all sit within this concept of kind of like mainstream adoption? And what does that take for your business as you think about going into production, going into scale? What is it going to take for that to be successful on your end?
Yes, so production is here. So we are over doing pilots. We're obviously still doing pilots, but production is here as well. So we can go live. We have the license. We can scale. So really, the time of production is here, and we don't longer have to wait for that. In terms of really mass adoption, it takes a lot of players to be involved in that space. And to give you a bit of an insight there, we are building that business, so the European-wide business at Turion, together with large partners, meaning that they will be major partners in actually using this platform, in being partners of that platform. And the conversation we have with the large banks around the world are very, very good. There is great momentum of doing what we are doing at this moment. The first partnership we announced is with Société Générale, a large French bank, who said publicly a couple of weeks ago, we are going to use Turion. We have roughly 10 further banks in the pipeline who are willing to actually go out and do that with us. And I think that's a major statement, because we all know that it takes time to move large financial institutions, but we see the momentum, as Nelli was saying as well. The banks are moving now, and the banks can do things that they couldn't do quite some time ago. So I think the start for mass adoption is here, and we're going to see large steps over the next few years, I'd say. Yeah.
Well, let's dive into that a little deeper. So just as we think about our final question here, Nelli, we'll start with you. Production's here, mass adoption is here.
Yeah.
Everything's moving faster. The banks are coming. It's beautiful.
Some of the banks are here already.
Some of the banks are here. Fair enough. But it's,
Yeah.
what did you say? It was a beautiful, rosy picture of the world, some version of that.
Yes.
Don't be too rosy or paint too beautiful a picture. But if you had to think about what does success feel like a year from now on this front, what does that feel like for you all at Kinexys?
I think, well, to be fair, I think on a lot of different levels, we have achieved what we feel is a success story for like treasury and cross-border use cases. DVP is kind of a unique segment because it really does involve a lot of ecosystem collaboration and buy-in. And so a success really looks like, true on-chain, as in like, Kinexys or other provider payment rails being used in a cohesive ecosystem with a number of assets. And for us, we're very institutionally focused. So it would be an institutional marketplace where not only are you using blockchain but you're using it, again, for the reasons why you should be using blockchain. So the composability of it all, the automation end-to-end of a transaction on both the asset and the payment side, the benefits, frankly, on authentication that can come if you are open to triggering the overall transaction on chain, the auditability of it, so all this good stuff. But you need real assets and you need real volume, and I think we're getting there, and I'm very optimistic.
That's great. Lidia?
So we are talking about changing how financial market infrastructure works. And I'm talking about the backbone of our financial system. That's going to take a lot of years to do so. And the technology we are talking about of actually being able to do that exists since roughly 10 years. And I'm talking about Ethereum having smart contract capabilities. So 10 years is nothing if you talk about changing the financial market infrastructure as a whole. So success looks like that if, I'm saying like maybe in 10 years or something like that, we have moved large parts of the assets on tokenized rails. And 10 years would even be a great success, in my opinion. I looked up the numbers for the US. In US, you had physical certificates and started with book entry securities in the 80s. And today you still have 1% of your securities being physical certificates. So it's 80 to 25, it's like 45 years, I'm calculating right. And we still have parallel systems running. And that's what we need to expect, what's coming towards us with regards to tokenized securities. So we will have parallel systems for the next decades. So it would be a great, massive success if we have a majority of those securities being moved within the next 10 years.
I completely agree. I think that would be, I think success is building blocks and building the right building blocks to get us to that future, and to do that as a group. I think that will be huge. So, and I would add to Nelli's list, customization. I think that's another one too that I think is a real unlock with this technology, and being able to see success of that to really improve the investor's end experience.
So can I just press you for
Sure.
1 year from now, if it's customization, is there an idea that you have in mind or a thought?
Yes, I have a few thoughts, none of which are public, but I would say in terms of this notion around, and we didn't even talk about smart contracts, but what smart contracts can mean for what investors can access and how they can access them, and what that means from their point of transaction. So what can they fund with and what can they receive back, and have that be a more seamless experience.
Wonderful. Thank you all so much for your time. Thank you all.
Thanks, Sal.